from Secret, the channel for trading and investing. Welcome to Markets Tomorrow, daily stock market analysis show where we look at technical charts and try to understand what happened in the market during the day, and also plan for a better trading day for the next one. That's May 8th, Wednesday, tomorrow, 2024. So we had a bearish day, Banknifty especially, and the market was sliding down for the third consecutive day. Bearish candles and VIX is rising abnormally. What do we expect? Let's try to understand that from the charts, and then we'll come back here. Okay. So here we have the Nifty 50 charts. We could see that it was moving inside a trendline parallel channel, and it had hit almost at the top of that and made all-time highs at 22,800 nearby, and then M pattern reversal is what probably may be happening. And the last 3 days we have deep red from last Friday where a big fall came in, and today that low also was breached today, which indicates even more bearishness, and it's confirmed with a 20 exponential moving average support no longer there for the Nifty. Market did bounce up from the 50 exponential moving average, and the gap that is there at 22,180 is also not breached, so it will still act as a support. So that's where we are. The candlestick, you can clearly see it's of bearish nature and it's wide range as well. And Banknifty, if you see, the even more wider range bearish candle that has breached the Friday's low as well and gone much below that, breached the 20 exponential moving average and closed below that. So that's the kind of move that you see on Banknifty. Remember, it had a breakout from a rounding cup pattern, and probably looks like it may be forming a cup in a handle, and the candle could find support somewhere, and then it would just restart after it finds the bottom to the next leg of the rally. Otherwise, it's well within a parallel channel. It hit almost the top of that, kissing the 6 away from the 50,000 rounding number, and then reversed and red candles consecutively for the 5th day. And the deepest red is today. Banknifty really moved back today as compared to the previous days. It was a Nifty that was losing the grip, but today Banknifty also lost the grip, and it lost 1.25%. It's 610 points lost in one shot, 1.62, 140 points lost in a single day. And Bollinger Bands. Before that, let's try to see intraday what happened. So it was sliding fall, and the fall was nearly 1%, 1.15% probably, somewhere in that range, and that's amounting to 250 plus points. And then it tried to recover but could not sustain the recovery much, and just could recover 0.5%, that's all, and finally closed negative. Banknifty also similar story, when there was a deeper fall of nearly 800 points, that's amounting to 1.5 and more, and tried to recover but could not move more than 0.5%. Right, so there is a big fall and a failed recovery attempt as well. That's what intraday price action you see. Bollinger Bands, if you see, Nifty, the bands are showing that it's consolidating. Right, you don't see any expansion on the Bollinger Bands any longer, which indicates potential sideways move ahead. Same story with Banknifty from today. It was in expansion mode on the upside when it hit almost the 50,000 5 days back, but today it just started contraction. The expansion is stopped, and that also the bearish bias on Banknifty as well as Nifty. So potential downfall, sideways price movement is what is expected as per the short-term daily charts, Bollinger Bands. Let's get back and see a summary of this. So we had corrected 5% on Nifty with 35% rally so far. The max retracement is 5%. Now it's 22,300 levels. and the third day of negative bearish candles, and today it's lost more than 1.5%. That's 5 points lost, and a wide range bearish candle is formed, and it lost the 20 exponential moving average as well. So Banknifty also cracked down today. Actually, it's cracked down worse than Nifty, even more, and the third day, it's actually the fifth day in case of Banknifty were having a bearish negative close, and it's fallen 1.24%, 610 points nearby gone with a wide range bearish candle. Remember, it had a 29% rally so far, 8.5% retracement so far. It's at 48,285. Intraday, we have already seen price action. The levels indicative are 22,000 for support, and then 21,800, and that's for the Nifty, and upside 22,500 and 22,800 after that. Resistances, Banknifty 48,000 and 47,000 will be the major supports to look out for, and on the resistance 49,000 and 49,500 the levels to watch out for. But we'll have a little more detailed study of resistance and support level. So basically, the resistance first would come in at the 22,500 zone, and because it's a rounding number, and also it's a breakout zone previously. That would act as resistance now, and after that you have the 22,800. It's a two resistance on the upside. Downside, you could find support at the 22,180, which is a gap support. In case the 22,235, which is the 50 exponential moving average support, is breached. So first support will come in at 22,235, and then 22,180, which is a gap. And then if that is also breached, then you come to the 20 exponential moving average retracement. Then you come to the 20 Fibonacci retracement level, 23 actually. That's now coming somewhere at the 21,900. But before that, you have the 22,000 big rounded number support as well. That were the in-range supports, you can see. And if that is breached, 21,800 has got 100 exponential moving averages, which could also help. And if the 21,710, which is the previous swing low, is breached, then we have even more bigger troubles than the comment, but hopefully it will find its support before that. Similarly, on the Banknifty, the first resistance would come in at 49,000 big rounded number, as well as the previous resistance zone. So that is the first place where it could find it has to conquer, and after that 49,500 is again a kind of rounded number. Resistance will be there, then 50,000. Those are the resistances in the Banknifty for the coming days actually. Downside, you could find support at 48,350, which is for the, it has actually breached the 20 exponential moving average at 48,350. So the first support would be for the down, slightly down at 48,000 and 48,140. So that 48,000 is going to be a good support. If that is lost, then it comes to the 47,700 before, right? And then we have 47,000 has got all the 100 exponential moving average, as well as Fibonacci 38 retracement levels. So that's how it is. And if that is also breached, it's not like it happened in a day. And then you go back to the major supports at the 200 exponential moving average near 46,000, which is again closer to the 50 Fibonacci retracement levels as well, in confluence with that. So that would be the major support. The worst scenario would be the 46,000, and if breach of that would mean a breach of the previous swing low as well, which is very close by, and then we'll have trouble. Otherwise, as of now, it's well within a trendline channel and seems to be retracing its way. And the retracement so far is 2.5 to 3.5%, Banknifty 3.5%. The last retracement that we're talking about. Let's try to bucket on the different parameters in bulls and bear buckets. So the higher high, higher low pattern is still maintained on both indices. That goes in favor of bulls. And we have the trend indicator ADX, which is bullish, which actually is wrong. I'm sorry. this is no longer a case because today we lost that. So Bollinger Bands are showing contraction and not an expansion with downside, so it's not for the bears. Still it falls in the bucket of the bulls. And the major sectoral indices, if you see, they're all close red except for the IT and the FMCG, which is showing some green. But the fact is that momentum in the short term has is either bullish or the sideways and not bearish, so that way it falls into this bucket. The industry are heavyweight stocks that contribute maximum to the index heavyweight stocks. I'm sorry. So they have also all of them close red except for the Infi, TCS and ITC and Kodak Bank, which has shown some green today. Not the TCS again. You can remove that. I don't think TCS has shown green today. Yeah, TCS also. Yeah. So the heavyweight stocks also close red mostly, except this, but the fact that the momentum on the short term, if you analyze, they are sideways or bullish, and except the Kodak Bank, none of them is in the bear zones. Kodak Bank has its own problems, even that it's trying to come up. I think it managed to climb to the bulls. Kodak Bank almost climbed to the, yes. So it's not even the Kodak Bank. So none of them is in the bear. So that's again a mistake. So none of them are in the bear zones. That's obviously why that falls in the bulls bucket. So the heavyweight stocks that contribute maximum indices still shows sideways or bullishness. Sectoral indices are also showing the same. None of them are showing any deep red section for the IT, which is also recovering and trying to climb back. Even the IT also has recovered, I believe, today. The IT index, let me just quickly see that if it's climbed back. So that's the weekly. Daily also, I believe, just managed. Oh, yeah, still not there. So that's fine. So that's how it is. So now, going to the global cues, the crude oil is cooled off with an 11% showing red. So it had been spiking up and went about almost near the 85-90 zones to the trend line top earlier, but it had cooled up now 11%. Now it's at 78 level, so which is good for an oil importing country like ours. The US major indices are showing green with 3 to 7% up after reversal area from 6 to 8% from the top on different indices like Dow Jones, Nasdaq, and S&P 500. So that is also positive in the global retracement. Is global market or the mother market US retracement is probably alright. That's probably likely to show more green in the coming days. So things in favor of the bulls, and what falls in favor of the bears is the fact that there's not so much short-term candlestick patterns that's turned bearish because of the last 3 to 5 days of fall, and some of them are weekly shooting star 3-candle bearish formation, double top M pattern breakdowns. All these are not 100% confirmed, but probably it looks like they may be happening if the higher low pattern is breached somewhere. So that way it makes us think that the market may further slide out towards the bottom of the trend line chart. So 20 exponential moving average is breached on both indices today. M pattern double low is seen evident on the Nifty, and momentum and also the trend indicator ADX, both of them has moved to the bear zones now on both indices. India VIX, that's supposed to travel 55% spike in the last 1 week alone. It's 2.2% up again today, and it's at 17 all of a sudden. You still have several days more before the poll outcomes or exit polls and all that come, but even before that, market seems to be heading to 20, and you have to be extremely careful when it is hitting the 20. You just have to stay out unless you are really a pro, right? Especially the options market, you just need some days to be out of the market before the election outcomes, because the markets may be violently volatile. Still, your levels and supports, it may not be doing much. It may still be in that range for the last 1 or 2 months. It may not breach either side, but it will be violently moving like this. So I have to be extremely cautious when VIX is hitting to 20 with elections outcomes are coming in another 15, 20 or in a 1 month's time. So it's a pre-election spike that's happening. It's quite natural, but you have to stay out of the market if you, especially with the options trading and all that, at least for some days. Those markets are likely to go crazy. The dollar has is showing a flat green, and it's at 105.21. Rupee remains to be flat green, but it's above the 83 managed central bank and gold is also not far from the all-time high. It had cooled off slightly at 6% or something, but still very close to the all-time high, which gives us a doubt as to if the price may be the money may be flowing from stock market to the safer haven like hedging instruments like the gold. Now institutions has been selling horrifyingly, I would say, like that. It's the entire April month they might have sold 50,000 crores in the cash market alone, and May also they have been selling. Yesterday also they sold 2,000 crores in cash, and today also they may be selling. So it's only the domestic institutional futures of money that is sold in the market, and the Fyers have been selling since last many years, and especially recently. So that's the reason why the market may not break out as we wish most of the time, because it's only the domestic institutional money that may be coming out. Once both of them comes in, that may be the time when the market may rocket. So, but you'll have to wait for that with patience. So that's the crux of what the bucketing is all about. Now, if you come to a conclusion, you can see that market has suddenly in the last 2 days turned very volatile. From 10, it is now 17 in the India VIX. In 3 days consecutive, it's down, and 5 days consecutive red candles on Banknifty, with bigger fall than that has happened today. You're losing 610 points one day, another day you lose another 700 on Friday. So starting from the Friday's fall, selling pressure is significant, and now today 20 exponential moving average also it's lost. Market has got back in the median dose consolidation, you can say, but the higher low bullish patterns are not breached, and market is in consolidation still with some bearish bias as per the Bollinger Bands as well. The bearish patterns like the weekly shooting star confirmation, double top M pattern, and all these things seems to be emerging. So you have to be cautious about that. Momentum in the trend is in the sideways, but not bearish yet. And investors, this might be opportunity to buy in quality stock long term, or go for rental income option strategies. Check out in the playlist. For traders, it's a matter of whether the market is breaking out or consolidating or breaking down. So the breaking down has not happened, breaking out has stopped, and market is in sideways. Very simple. Momentum trend and price action everything indicates market is neither up or down. So down direction strategies may work out, and in addition, option premiums might have increased, and the IV to RV spread has improved, and IV percentile also has improved. So that means, market you may be able to play it better on that as an option seller, but it's extremely risky because if the VIX is going out of your control. So probabilities of a continuation of the short-term reversal further down some more before it finds a word most likely. So consolidation is actually what is happening. Right? Having the VIX at this level, it always makes sense to have a portfolio level hedge. Use hedging instruments like gold and other things to have portfolio hedging. And check out all these playlists, different strategies that can be applied here. And always have stop losses, right? And hedge positions, all right. That's the only thing that's in your control. All the technical analysis will go in black points. That volatility spikes above 20s, anything could happen. So, which is about that. That's all I have. Happy trading, happy learning, happy investing. Bye bye.